This meeting is being recorded.
Okay, and I'll get started because we've got quite a lot to get through. So if I share my screen, excuse my voice, it's a little bit squeaky, but I've got had a bit of a cold. That's not what I want to show you. Okay, can you now see my trading view for gold?
Yes, I can, Richard.
Okay. So as usual, we start off with a clean chart and build up the three-line strategy from there. Possible we might have some people who haven't been on before, so I'll take my time on this. I hope my voice is going to last. It's the remnants of a cold. So here we are on the 15-minute gold chart on TradingView, and the first thing I need to do is point out that these two vertical dashed lines are the beginning and the end of yesterday's trading. So this is today's trading and this is yesterday's trading. So we put a volume profile on yesterday's trades, and to do this, if you've got a free version of TradingView, if you look on the left-hand panel, there are some icons, and if we go 1, 2, 3, 4, 5, 6, 7, if you click on the little arrow on the 7th one down, it will give you a drop-down menu, and you'll see fixed range volume profile. So if you click on that, and then you align your cursor with the first candle of the day, which is that small green one there, and then you align the cursor with the last candle of the day, which is that one there. Now it doesn't matter, should point out, I'll just take that off and I'll do that again. Just to put that on there. So it doesn't matter whether you're below the candle or on the candle or above the candle, it all works just the same, so long as your cursor is in alignment. So you could do it down there, well away from the last candle, and it would still work. You've got to be on the last candle before the session ends. And there you've got volume profile for Monday. And the first thing that you see, there's a red line there, which is the point of control. So it's called the three-line strategy. It's part of the V70 strategy, and V70 is derived from 70% of the volume. So all of the trades that were placed yesterday were placed between the top of that blue shaded area and the bottom of that blue shaded area. But the bit that we're interested in is the top 70%. So 70% of all the trades yesterday were placed in that blue shaded area there, and the other 30% were in where the grey lines are. So we put 3 lines on, and we take a horizontal ray and we put it at the top of that blue shaded area. Yeah, a black line will do it. We'll put a second one at the bottom there. And what I normally do, just to make sure it's accurate, is I click on this zoom in icon, and I focus in on that particular area there. And it just allows me to get it slightly more accurate. So if I put that line there, and I take this line and I put it there, that's accurately placed. So I zoom out again, and I'm going to draw my third line. It's already been drawn on to me for me up until the end of yesterday, but I need to extend it through today. So I'm going to put a red line over that there, make it red, and again, just to make it 100% accurate, I zoom in where those lines cross over, And as you can see, I'm very slightly out. And just move it and put it there. So that's the 3 lines. So zoom back up again, and we've got these 2 black lines indicate our field of play. Something that I do to make it more visual, just to draw my attention to it, is I put a rectangle on there and I shade it a slightly different color. So and I normally make that sort of a pale yellow, and if I drag it across, that sort of defines what we call the field of play. So we've got the top of the field of play, the bottom of the field of play, and the POC. Now we normally label these, we normally label this the value area high, and we label this line the value area low. And this is yesterday's POC, which is also today's target. I'll just see if I've got those on a template. Template, yeah, there we go, POC. So that's today's target. Put that on there. Look for a template, value area high. Put that there. And the last one, value area low. Okay, so we've now done the setup for the 3-line strategy. We've defined the field of play. We've got our target for today. And now the next thing we do is we ask, is price within the field of play? And the answer is no, it's not. It was earlier today, and we won't dwell on this too long because we're well outside the field of play right now. So if you'd been looking at this chart this morning at midnight UK time, you would have seen that price came within our field of play and it went down to our target. So it has hit the target once today, but since then it's gone right out. And I suspect, for reasons which I'll explain later, that we're not going to see it come back into the field of play again today. So that leaves us with a problem. But let me just repeat, the strategy is based on, see if I can find what I was looking for. Not that one. So by the way, you feel free to ask any questions as I go along. What am I looking for? I'm looking for the pathway. There we go. That's the one I'm looking for. Right. Okay. So the 3-line strategy is all about taking based on where price is once it's fallen into the field of play. So at this point here, we will be looking for cells down to the target, and that is actually I'm misleading you here. Let me just see if I'll get rid of that. Having found it with such great difficulty, I'm now deciding that I need to get rid of it. So what we would do following the 3-line strategy, we would take a trade from the value area high down to the target. And once it's hit the target, we would exit the trade and we wouldn't get back in again until price was either at this point back up at the top, or if it was down at the bottom. So we could take further trades from there to there, and we could take further trades from there to there. This is if we're following strictly the three-line strategy, which is, to be fair, these trades are pretty safe. They are safer than trades that you take outside of this three-line strategy. But it does restrict you because, as you can see, price is way outside our field of play. So at the moment, this strategy is out the window, really, because we're not allowed to trade until it gets in the field of play. What I then, with experience on using this strategy, I then discovered that with a little bit of knowledge and experience, I could take additional trades. So I could take that trade down there and exit the trade. And then when price came back to the POC, I could take a trade from, I don't know what have I done. I'll try that again. What I've discovered is that I can take a trade down to that POC, but I can also take a trade back up to the edge of the value area high. And I could then take another trade. And on some occasions, I could take another trade down to there and just click on that, and possibly even take a trade back up there. This isn't working there the way I expected it to, but you get the gist of it. I was starting to take trades down to the POC, but I was also taking trades away from the POC, and I was taking down to the POC and beyond the POC, and then even back up. So I started to take additional trades using this strategy. So I could take that one, and I could also take one up to there. Now, let's say you need a little bit more experience to do that. And by that, what I'm trying to explain is, at this point here, if I'd taken that trade, and let's just measure it, just to put it into context, if I'd taken the trade this sort of half midnight this morning, down to the POC, that would be 72 pips. I probably wouldn't get all of those because I'd be a little bit later getting in than I've marked that off. But you know, there's still 72 pips down to there, and there's more than 72 pips from that line down to there. Again, we'll just measure it. So the field of play altogether today is looking like, I'm not having a good day on the tools at the minute. Let's see if we can take it down there. No, it's not allowing me. So I'll tell you what I'll do. I'll beat it at its own game. And I'll take it down there. Right, so I'm measuring the total field of play. It's 180 pips from top to bottom. So that would give you sufficient to play with if price was within the field of play. And those would, the trades down to the POC, or you know, from one extreme to the target, or from the other extreme to the target, those are pretty safe trades. I'm looking now at trying to explain why it's a little less safe to take these trades. If you look at, just to zone in on that one there. So price came down and it hit our target here. It crossed our target here. And then it started to turn around. Now, if you were going to get into a trade, you might be fooled into taking a trade on that candle there. And then price turned around and went back below. And for quite a few candles, because these are all 15-minute candles, remember? So from that point, or it actually crossed it there. So 1, 2, 3, 4, 5, 6, 7, 8. For 9 candles, so that was over 2 hours, you were in not well, partly in drawdown here, and even there you were still in sort of consolidation. You weren't going anywhere until it decided it was then going to go up. So there was a gap of about more than 2 hours between that price hitting our initial target and then definitely reversing and going back up. So it is possible to take those trades, but you have to take them separately. You have to take them with care, and you have to take as much care on entering the trade as you did on the initial trade. So you can take those trades. That trade is a bit more dangerous because you're assuming if you're setting your entry there and you're setting your take profit there, it's got opportunities to bounce up and down just as it did there, bouncing up and down. So what I do is I take the trade down to that point and then I reassess. And when I'm ready, I'll get in to that trade there. And the same with this one. I would only trade up to the target and I would reassess and then go for a further trade. Now let's just spend a little bit of time thinking about what would entice me into a trade. So first of all, this is my checklist. I look for 3 things when I'm entering a trade. First of all, I look for the ninja matrix in my direction. So if I'm here and I'm looking for a sell, I would wait until we got the ninja matrix down. So this is the ninja matrix indicator. The background is turned from green to red. So that's my first box ticked. I've lost out on a few pips. So I wouldn't have got those initial pips. I'll be taking pips from about here. And just looking at that and taking a guess, I think we're looking at about 35 pips down to the target from there, but I wouldn't be getting in yet. I'd be looking for the ninjacator to give me a ninjacator down. And where are we? We didn't actually get an indicator. Oh, we need to be on Heikin-Ashi candles. Heikin-Ashi candles. Right, okay. So we'd already got the ninja down prior to the ninja matrix down. So that's one big box ticked. That's a second box ticked. So we're now looking for the third item on my checklist. Now this is to do with these moving averages. You can see I've actually got, if I take away these arrows that I put on before, we've actually got 3 moving averages. We've got the yellow, which is the 5 moving average, which means that an average of the 5 previous candles. So that 5 MA is definitely below the 13 MA. Now the 13 MA is the one that comes with an indicator, and it's already built into an indicator. It changes from green to red and back to green depending on the trend. So we're now in a red mode, so that's indicating a sell. The 5 MA is below the 13 MA. So I would be ready to get into a sell trade at that point. We've got the ninja down, we've got the ninja matrix down, and the 5 MA is actually, there's quite a gap between the 5 and the 13. So I would say, yes, I'm going to get in for a sell. And I would make that red line my take profit. You could, if you follow some of Jeff's sessions, he would say, stay in because we're still going down. and he would say, trust the matrix. The matrix is still in sell mode, and the moving averages are still in your favor. So you've got two choices. You can either take my advice and set your take profit at that point, or you can watch the trade and take and actually get out when it starts to reverse. Jeff would always say, trust the matrix. The problem I have with trusting the matrix absolutely is that, and here's a good example, there was, you got some pips on the way down, but if you stayed with the matrix, if you stayed in until the matrix changed, you were going to be back up where you started, or yeah, just about where you started. So you wouldn't have lost any pips, but you wouldn't have gained any either. I'll just have a look and see what's in the chat. When would you put your stop loss on break even? Okay, I'll cover that. I'll cover it when we come to this section. It's easy to illustrate on this section here. So as I say, I'm not here to tell you how to trade. I'm just telling you how I trade. I'm not a financial advisor. I'm just one of the guys in the group. But the way I would trade is I would get out. I would actually set my take profit at the red line, and I'd be happy with those 35 or so pips. If you want to follow Jeff's trading style, he would probably say stay with the Ninja, and he wouldn't get out until the Ninja matrix changed to up. But you know, that's just personal choice. That's down to you. I can't tell you how to trade. So
I would stay in until the PSAR flipped.
Yeah, that's a third alternative. Yeah, that's a good alternative. The PSAR is a good indicator of direction. So what Wayne's saying there is you've got the orange dots. The PSARs are above the price at this point, and on this candle here, they flip down to the bottom. And the other thing by coincidence is that candle there is a complete doji candle. It's complete indecision candle. It can't make its mind up whether it's going to go up or down, and that's possibly a good time to get out. You're certainly not going to lose money doing it that way. Whereas if you stayed in until you got the Ninja matrix, you're in danger of coming out with nothing. So yeah, good point. The PSARs is another good alternative. Let me. I'll just try and answer the question about when do you move your stop loss to break even. It's a bit of a subjective thing, really. I tend to work on the number of pips. If I'm about 10 pips in profit, but I think there's still room for more pips, I would move my stop loss to break even. But that's very subjective. It depends on the circumstance. I think it depends on the pair that you're in and the volatility at the time and so on. If I was, I'm just trying to work out how to phrase this without misleading. I'm tempted to move my break even, my stop loss to break even, from the point I go into profit, but I don't do it immediately. I sort of try and assess how far price is going to go, and somewhere between 5 pips in profit and 10 pips in profit, I would certainly take. I would certainly move my stop loss to break even. I mean, just going back to stop loss, if I was getting in on this candle here, my stop loss would probably be just the other side, just above that PSAR there, to be on the safe side. Now, let's just measure that and see how many pips that is. If I was setting it there and price was somewhere here. So you're looking at a lot of pips. You're looking at 76. So, you know, I would have to question my, you know, if you talk about risk to reward, there's 76 pips risk and maybe 35 pips reward. So that might be a little bit of a dodgy, but you know, if you're just scalping a few pips, this trade here is a fairly safe trade. You've got everything in your favor. You've got Ninja Matrix down, you've got Ninja down, and you've got all the MAs in the right place. So, you know, I would take a bit more, I would regard that as a pretty safe trade to take. And that's what I'm trying to say about when, you know, when do I move my stop loss to break even? It depends on the circumstances, really. There isn't a defined, I suppose the safest thing to say is as soon as possible. Move your break even to stop, sorry, move your stop loss to break even as soon as possible. But the danger, especially with trading gold, there's a danger in that the price is quite volatile, so it can temporarily move, reverse itself and take you out, and then continue to go upwards. So it's not an easy one to answer. I'll attempt to answer it as we go along. Right, so I've covered the basic three-line strategy and what would tempt me to get into a trade. Now let's have a look at this situation here. We're looking at this is not textbook, because we're actually moving outside the field of play. We're moving away from the POC, but we're also moving outside the field of play. Now I've started taking these trades, particularly in recent times when gold, let's just have a quick look at gold. If you look at the, if we look at the, that's too much. Let's just have a look at the trend in gold in recent times. Gold has been on an uptrend since certainly back in the beginning of February. That was the 31st of January. So even if we just look at the 31st of January, it's been going upwards, and it's sort of been forming higher highs almost every day. So what's been happening to our three-line strategy is it hasn't been applying in a lot of cases, because the price has been outside of the field of play. So I've had to develop a further strategy, and some of you will know that I've sort of looked at things like Anastasia's strategy, which is based on volume profile, the same as our V70. It's based on volume profile, the same as V70, but Anastasia actually works away from the point of control. She uses the point of control to enter trades either away in that direction or away in that direction. And so I started following that line of thought, and that was how I got my pips this morning. Let me just see. I actually looked at this chart at round about this point, so the 6:15, 6:30. I can't remember exactly, but I was up early, and I noticed that when I put my volume profile on for yesterday, I noticed that we'd been down to the POC and then just started to drift away. And because gold has been creating new highs on an almost daily basis, and because of the situation in Ukraine and with the American dollar, I suspected that we might be going north. So I got into a trade here, and I'll tell you why I got into the trade. And I might be jumping slightly ahead here. Yeah, okay. So I was watching some of Anastasia's. Well, first of all, I've watched Anastasia for quite a while, and she does teach taking trades away from the POC. So that's step one. Let's start with we've got the 3 lines, which is the basic strategy that I teach, and then there's sort of a variation number 1, which is there's nothing wrong in taking trades away from the POC, even if you're outside the field of play. And now I'm going to move on to sort of a second variation. And I'm not aiming to confuse anybody. I'm just trying to offer you alternative ways of trading the volume profile. So one of the things that Anastasia does is she looks at here we've got from this ninja up here, which is the 4:45 candle UK time, up to like 6:45. I probably got in at let's say 6:15. So let's have a look at this area from this candle here to, well, I'll be generous and I'll go to 6:30. Let's assume I was looking at it at 6:30. She would draw she would put a volume profile on a different. This is the original volume profile from yesterday. This is a new method of using volume profile. So we're placing the start of the profile on the ninja up. There's the bottom of this. This is what we call an impulsive move. So from I could even take it from that low there, or maybe even that low there. But anyway, we'll take it from when the ninja up came, and take it from that candle there to, let's say, the 6:30 candle. This is what I was looking at this morning. This is what tempted me to get in. So we've got a new volume profile. And we're not discounting the previous one, but if you look, this is yesterday's volume profile. This is the new volume profile based purely on. Let me just show you something else. If you've got, I'll take that Heikin Ashi candles off. So there's the volume profile. All right, okay. Did you see what happened there? When I took the Heikin Ashis off, the start of the trend upwards shifted. So what I'll do, we'll ditch that one and we'll start again.
Yeah, you need to use ordinary candles, don't you, Richard?
That's right. Yeah, you use ordinary candles when you're using the volume profile. In fact, I mean, Paul said this morning he only uses Heikin Ashi candles to place to be able to see the Ninjacator up. This Ninjacator now, because we're on ordinary candles, is a false reading. Kevin designed the Ninjacator to work on Heikin Ashi candles, so you can ignore that. But let's just put this volume profile on again. Fixed range volume profile. We'll put it on that candle, although we're ignoring the fact that it says Ninja up. It is actually the start of the upward trend, although that might be the start of the upward trend. But I'm going for this one because this is the start of the green. We were in red, Ninja Matrix, and this is the start of the green. So we'll go for that one. And if you put the volume profile on to 6:30, there we go. So that's a smaller volume profile. I hope this isn't confusing everybody. So what we've got is a new volume profile, which is higher than yesterday's volume profile. Now, let me tell you what's going on in my head when I look at this. Can you see how the new 70% ends up there? So it sort of increases our field of play, but that's not really what my eye has been attracted to this area here, which is very low volume. This is showing volume at a particular price. So there was a high volume at 1998.71, and there was a high volume at 1995.19. But above that peak, there was a decline, and then there was virtually nothing in this area here. There was no trades being placed, and very few trades being placed as you go up there. And yet, what happened? There was a massive increase in price. And what that tells me is we've got some imbalance, because if I know I'm introducing something else, but I'm just trying to let you know how I think. Can you see the bottom of that candle there? That was where the sell of that candle, the wick of that candle there. So there was a sell going on down there, and the candle before there was a sell, so there was a buy going on there. But in between, that point there and that point there, everything was buys. I'll change the background in there too. So just where that black rectangle is there, that period there was all buys and no sells. And so that attracts my attention, because what that's telling me is that price has been manipulated. It's being moved higher and higher and higher very rapidly. And this is something that the banks do all the time. If they want to move a price, they move it really quickly so that retail traders like you and I cannot get on the bandwagon. They don't want us to get in and make profits out of that rise in price. They want to do it absolutely as quickly as possible. So that's a sign of bank manipulation. That tells me something that I'll come back to in a second. Well, but basically what it tells me is that price has got to come back to fill that imbalance. And actually what it did was it came back to fill that imbalance at that point there. Right, so I'm moving off the topic, but there's volume profile, which, and this is what I saw this morning. So let me just see if this works. No, move 1 second. There's a thing here called bar replay. And what it does is it removes any candles after a certain point. So I've removed, I'm now showing you what I looked at this morning. That this was the 6:15 candle. So at some point between 6:15 and 6:30, that's when I looked at this trade, or looked at the potential trade. And this is what I could see. I could see the volume profile. I could see, well, at that point, because the volume profile has been stopped at that point, there's a bit more activity volume-wise, but we'll forget that for now. I'm going to introduce something else now, which was a confirmation as far as I was concerned. It helped me to get, I got into this trade, and if I just play So this was what I could see when I got into my trade. And I'm just going to move it forward time-wise. So there was a big candle, two big candles, and it stopped. The maximum price was up there. I'll see if I can stop this. So there was a move from this count. This was a 6:15. Sorry, this was a 6:30 candle. There was a big move up, a second big move, and then it sort of balanced itself out at the top of that candle. That was as far as price has been today. But look at the number of pips from the bottom of that candle to the top of that candle. There were 234 pips within half an hour. So that was my first trade this morning, or I think I got my first pips. I got my first trade out of that move this morning. I think the other trade that I posted was from last night, wasn't it? I took some trades out of here. No, it was late on. It was in this area here. I got out just before close of business last night. So I posted two trades. That was one of them. This was this morning's. And I must admit, I didn't get all of those pips because I thought price was going to move up to that level there. And I'll tell you why I thought that. Can you see this? Yesterday's high was sort of the top of that candle there. So I drew a line there at 2002. So I entered the trade and I set my take profit at 2002. If only I'd waited, I could have got a lot more pips. But, you know, let's not be greedy. I wasn't to know whether it was going to go up there. I had no idea. So I went for my, I think I got, was it 30 pips, or I got quite a few pips out of that move anyway. So I'm digressing again, but is this useful to anybody, or am I just rambling, bumbling along? Are you finding this useful?
Yeah,
I am. Yeah.
Yeah. Okay. Before.
for sure.
Oh, you carry on, Richard.
Okay, because I'm going to confuse you even further now.
Should have said that.
I was wondering whether I should do this, and then I thought, well, I should, because the point of my sessions is to show you how I trade gold. That's my only mission on when I do these. It's just to show you how I managed to get my pips, and just think out loud, if you like. So if we're back to right, so we've drawn. This was me at 6:30 this morning. I drew this volume profile as far as we got when I looked at it. So what I need to do, because I took my pips, I kicked myself because I'd only taken those pips up to 2002, and I could have taken another 186 pips. So I was a bit annoyed with myself, but there again, there's no point in worrying about, if you get 30 pips and you got your lot size right, you don't need to worry about any other pips. Right, so I then decided to, and I don't think I've posted these trades yet, but I will do later in the afternoon. I've taken quite a few pips since then on gold, and this is how I did it. I got my volume profile and I took it from the bottom of that, took it from that candle there to that candle there. Right, doesn't matter where I put it. So I've got a new volume profile. And nothing much has changed because the new POC from that volume profile is just above yesterday's volume profile. So nothing changed there. There's one or two gaps here. This is imbalance, and there's very little volume here, which is showing a bit more market manipulation. You know, that's a huge rise from the bottom to the top, massive rise, and yet very little volume. Now, this is what I'm going to add to the strategy, and this is based on, I've been watching more of Anastasia's teachings. You'll have seen when other people use Fibonacci's. So I'm going to use a fib retracement. Don't worry if this is entirely new to you, I'm just trying to show you what went on in my head. So, now, with fib retracement, you've got to be careful where you place the parameters. So this has got to go pretty tight on the bottom of that candle. If there was a wick, it would go on the bottom of the wick. But there was no wick on the bottom of that candle. So I'm going to place it right at the bottom of that candle, and then I'm going to place it right at the top of that candle. I might be slightly out, but yeah, I'm near as makes any difference. And I'm going to get rid of those labels because we're no longer in the field of play, which is the whole point about this session is, what do you do when you're outside the field of play? So we've got a fib retracement, and I've used the basic settings, which are 0, 50, 61.8, 71, 78. So I think if you take the fib retracement tool out of the box, I think it's got those on anyway, but if anybody wants to take a screenshot, you can do. What Anastasia says is, okay, so you've got the volume profile. If you then put the Fibonacci retracement tool on it, you might get some idea as to where price is going to go next. And what she's saying is that having reached the higher high up there, and it then starts to come back, how far do you think it's going to come back?
50%.
Sorry, say again?
50% normally, that's what you look for, isn't it?
Yeah, well, you know, she has a sort of a wider parameter. She'll say it can be anything from 50% to, even on occasions, it can be, if you watch Brian Knight, he works between 71 and 78.6. But Anastasia is a bit more flexible than that. She said anywhere 50% is a starting point, and 61 is another good point, and 71 is another. You know, she's not saying it has to be exactly 50%. The way I got pips out of this area here this morning. So what she was saying was, if price has gone to its maximum level, or you know, its current maximum level, which is up there, and you've got a wick there at that point and another wick at that point. So it's looking fairly positive that that's as far as price is going to go for the time being. There must be some resistance there, stopping it going any higher. So if it's going to retrace, it may well go back down to 50%. And sure enough, it did. And in fact, it then went down to 61.8%. And then it started to make its way back up again. So I was watching this, and I'm really just testing this out. And it worked for me last night on that previous trade, and it worked for me again this morning. So as I say, I'm not saying this is absolute, It's just something I'm trying out. But you know, I got a fair number of pips this morning. So I've been watching this morning. I set an alarm on the 50%. So that I didn't have to sit and watch it all day, but I got an alarm when it reached down to this 50% point, and then I started to watch what was going on. And Anastasia talks about pullbacks, and I saw a pullback here. It came down to 50% and beyond the 50%, then it went down to the 61%, and then it started to give the impression it was going back up again. So I could have been tempted into a trade because we've got a green matrix background. We've had a ninja up there, and the only thing that stopped me getting it, well, there were two things stopped me getting in a trade at that point. One was that the PSARs were above, and they should really be below. And the other one was the moving average. The 5 was still below the 13, and the 13 was red. So I was getting mixed messages. I was getting PSAR above when it should be below. I was getting yellow below the red when it should be the other way around. So I stayed out of it, and sure enough, true to what Anastasia said, there was a pullback. It pulled back to the 50% line, and then it started to go up. And I didn't get in. I waited, I followed my own rules, and I got in on that candle because the PSAR flipped. We were on a ninja matrix up, and we'd had, well, if we go on to Heikin-Ashi candles, there was a ninja up. So, well, the ninja up came on the candle afterwards. So whether I'm not sure if I got in on that candle or that candle. It was one of those two. And sure enough, there was a bit of a pullback. So good job I had a decent stop loss. That was a complete indecision candle, and then it started to go on its way. No, I think I must have got in that one because I'm out of the trade now. So I must have got in before we started this session. So I took pips in that area there when it started, when the PSAR flipped, when we had a yellow above the green, and I jumped. To be fair, I jumped in a bit early because we didn't have the ninja up. I should have waited, but if I'd waited, I would have had more drawdown. I would eventually got more pips, but I didn't get any drawdown on the trade I went in. So it must have been that candle there. So give myself a slap on the wrist because I didn't strictly follow my rules. But what I was trying to do was to test Anastasia's theory about fib retracement down to 50, 60, 70%, and then back on its way. And it's now back to where it started off. It's now back up to that higher high. So where is it going to go now? Let's just take a bigger picture.
Well, you're only $10 away from an all-time high on gold, Richard.
Yes, well spotted. I've got there, that purple line there, 2075 is actually, I believe, was a previous high. And I thought I'd put a value on it. I thought I'd put a date on that, but it's going back some way. I think it's going back to August 2020, so I'm not going to find it on that chart. There we are, previous high, the 7th of August 2020. It went up to that point there. Try and get out. No, I'm not going to find it, but that was it. We that point there, which was August 2020. So it's not beyond the bounds of possibility that price could continue to go up. Well, let's think about the options here. We'll just reset the chart and we'll just I'll get rid of my fibs and I'll get rid of the and I'll get rid of this, and we'll use the VPS3, which is the session volume. Okay, so that's the standard view of things. And then we'll think about what's going to happen now. So we know that there's a previous high way above. That was the highest high I could find. And we reset that chart. Right, okay, so we're looking at a normal view on the 15-minute chart. Now there's three things can happen with price. It can either go up or it can come down or it can go sideways. And if it comes down, the first point it'll be attracted to is today's point of control. Now that's not as strong a magnet as yesterday's point of control, but it still has to be taken into account because I think if it's coming down, it will at least stall at that point. It'll get to that point and it'll think about it. And why? Because there's a lot of volume at that point. That's the highest volume so far today. And that's where people have been putting the money into gold, and therefore that will form a resistance. If price starts to come down, that will be a support, I should say. That will be a support, and buyers will try to defend that position. If sellers win that battle and it comes down, that red line there, which is yesterday's point of control, is another magnet, but it'll probably stall at the top of our value area, and it'll have another think about it. So if it's coming down, it could even go all the way down to this, which is a previous point of control. This is Tuesday. This is Friday's point of control, which has not been taken out yet. So it's another magnet. But that's only if price decides to come down. I think because of the way that price has been going, you see there, it's been going up and up. These are the volume profiles for the past week and a half. It came down at that point, and ever since then it's been going up. Slight retracement there, but it went up and up and up. So I think I think price is tending to move further north rather than go back. So I would say we've got a good possibility that price will go up rather than down. I could be wrong.
Well, it hasn't broken structure, has it? So technically we're still in an uptrend.
Yes. Yeah. Unfortunately, that gives us no targets whatsoever. No realistic targets, because we're looking at 2075 from 2050. So you're looking at 600 pips to reach the previous high. Yeah, 550 pips. I don't think it's going to go that far. but it is looking to me as if it's going to go up. Now, the only thing is, why didn't we get a big move at 130 when New York opened? We'd find a 130 candle, it barely moved. So I'm beginning to think we're in a bit of consolidation. So what would I do in those circumstances? I would look to put a parallel channel on this.
Is there any major news this afternoon? Do you know, Richard? I haven't looked, to be honest with you.
Neither have I, to be fair. I watched Paul's session this morning and there was nothing at that point. I don't think there was anything radical.
It's two medium at 3 o'clock.
3 o'clock. Okay. Well, oh yes, I've got this. This is a 3 o'clock US news, but it's yellow. Well, just looking at that, it says yellow. It will be a red circle around if it was red. But anyway, we'll have a look. I think we've hit. Let's just reset the chart and then we don't get confused. Right. So that's a sort of a real-time view. And I think we've got into a bit of a channel, haven't we? We've moved up, quite a strong move up, and then it's starting to bounce around in that channel. So let's I never know where these are. There we go. Let's put a parallel channel from the top of that. That was sort of the highest point that price went to. And then bring it down to, well, that was the lowest point it's been recently. So that's quite a big channel, but it's still bouncing around in that channel, isn't it? We could potentially move that up to the bottom of there. And we've got price bouncing from a high there to a low there. Let's ignore that because, well, if price starts to go down, we'll have to reconsider it. But I think we're in a consolidation period or rotation period or accumulation period, whatever you want to call it. I think it may be that buyers and sellers are having a bit of a bun fight. It may be that buyers are accumulating their positions and are just waiting for more money. Now, first thing I do is I put an alarm on this. I know I haven't drawn it strictly accurately, but what I need to do is set an alarm alert to tell me when price is exiting that channel. I'll put it on once per bar, and I'll now get an alert when price either moves out of that channel, well, moves north out of the channel or moves south out of the channel. Gives me sort of an early warning if there's something happening, because price at the moment is sort of stuck. And what we need to be careful of is stop hunts. Banks have got a habit of moving price in one direction to take out stop losses and or moving price in the opposite direction to take out stop losses. And we need to be careful we don't get caught out with those. But the first thing is for us to be aware that price is moving out of the channel, because then it's making some kind of move. So that alert will go off whenever price gets outside the channel, and then I would reassess the situation. Gut feeling is that we're going to go upwards. I think that this might be banks accumulating or consolidating their positions, putting more money in without affecting the market too rapidly. So I think what might happen is price will continue to go up. but we don't want to get caught out by getting in too early. If there's a stop hunt in that direction, because remember, if banks want to move price in one direction or another, they tend to, well, they can't, they fund those moves by taking retail traders' money. They look to see where our stop losses are placed, and they say, right, we'll have that money, and sometimes they'll take price higher and take out stop losses on people who are predicting a sell, and then they'll come down here and take out stop losses from people who are predicting a buy. So they take all that money out there, and they'll take all that money out there, and then they'll do what they were going to do in the first place. So we need to be careful that we don't fall into that trap. So my plan of attack is wait until price goes up, and to use Anastasia's word, wait until there's a gap. Wait until there's a candle closed above that price. So be patient, wait till a 15-minute candle closes above that price at the very least, because otherwise you might just be in a stop hunt.
Richard,
Below.
Or
do
just,
you realise you're on Heikanashi?
sorry, say again?
Do you realise you're on Heikanashi?
Thanks very much. I take Heikanashi off. There we go. We now got the real picture. Thanks for that. I have a habit of keeping Heikanashis on when I shouldn't. Yeah. So yeah, everything I've just said, I think it's going to go above. That might have been a bit of a stop hunt there. I don't know. Doubt it, because it didn't go any higher than that one. But we just need to wait and see. You cannot force price. Price will do what it wants to do. So if it goes above, which I think, my gut feeling is it's going to go upwards. If it goes above, don't be tempted to get in until you get the confirmations. Well, until you get a candle close. At the minute, we've got the other confirmations. We've got a green matrix. So that's predicting a sell. We'll go back to Heikanashi's. Yeah, we've had a ninja up, so we won't get a second ninja up. So ninja matrix up, ninja up, and we've got the 5 moving average above the 13 moving average. So everything's looking like it should go ahead for a buy, with the caution of don't get caught in that stop hunt there. Okay, now I think I've covered everything I was going to cover. Can I just ask, did everyone have a look at that lot size indicator that I posted yesterday?
Yes, I did, Richard. Thanks very much. Much appreciated.
Okay, it's something you need to test. I mean, I've used it on gold, but it needs to be tested before you put it on a live trade, just to be sure that your broker is sort of roughly in line with their data feed as well. But it looks good, and it sort of takes a lot of brain work out of deciding on what your lot value needs to be, what your lot size needs to be.
Did you ever finish that spreadsheet that you was working on a few weeks back, Richard?
Sorry, say again?
You did a lot size spreadsheet a few weeks ago.
Yes, I started one, didn't I?
Yeah, did you ever finish it?
When I get a chance, I'll try and finish it off. Yeah, I've got so much on at the minute, but
1,000 a day, isn't it?
not enough hours in the day. Yeah, I've sort of got halfway through it, but I'm conscious I need to finish that off. And the other thing I need to do is I need to do my version of Anastasia's slides to make things a little bit clearer. What I have been doing is I've been looking again at the boot camp. I've been watching the boot camp videos, just so that I can explain things a little bit clearer than I did the first time. And I'm going to produce my own slides so that you can take screenshots and follow them. Right, so if there's no further questions, I'm now 12 minutes over time, and I was going to watch Anastasia. She's on at 2 o'clock.
Oh, is she?
Yeah, but she's always 10 minutes late. So
Okay, Richard. Thanks very much indeed. Much appreciated.
not a problem. Anything develops this afternoon, I'll do a further post. I'm hoping to get a few more pips out of this goal before the day's out. But anyway, thanks for jumping on. I'm on again at 8:30 UK in the morning, and we'll have a look at the fresh chart for tomorrow.
All right, Richard. Looking forward to it.
Thanks a lot now.
Cheers, Richard.
Thanks,
Thanks, mate.
Bye.
Cheers now. Bye.
Bye.